Hey, what's going on, traders? Hope you guys are well today. This is Chris from Virillo Trading. In today's video, we're going to talk about something called a funded trader evaluation and some things that I've learned about it, been learning about it. So I've actually decided to do a funded trader evaluation. And for the purpose of this video, we're going to be talking about the company Earn2Trade because this is the one that I have chosen to do a funded trader evaluation with. So in this video, you might find a lot of information relating to funded trader evaluations and also some of my thoughts about the funded trader evaluations and things that you really need to watch out for and be aware of if you are planning to do a funded trader evaluation. The point of this content is for educational purposes only. And if you enjoy it, leave a like on the video. Let's get to it. All right, so I'm sure you guys have heard of this stuff before, and what this is basically a funded trader evaluation. Now, there's a number of companies out there, and they're all in competition with one another, and the point of doing something like this is to essentially get funded by a prop firm, and then you're trading an account size and you're receiving a percentage of the profits that you're making. Now, they advertise 80%, so you keep 80% of the profits you make in this account when you get funded. But in order to get funded, you need to do an evaluation first. That's how these things work. So for this video, we're going to talk only about Earn2Trade simply because this is the company that I've been able to gather the most information about. And I was able to talk with a few traders that have done these combines before and a few of them that have actually passed the evaluation and gone on to get a funded account or a Livesim account. So I've gained some insights by talking with traders who have actually done these things. Now, I'm doing one myself starting today, so I think this is a relevant video for the time being. Now, again, I am going to place an affiliate link in the description because, again, guys, the point of this YouTube channel is for education, and I'm not really compensated for anything other than the ad revenue I get on these videos. So if you do decide that this product might be right for you down the line, please remember to use the affiliate link that I provided in the description below. All right, so let's get to this. Okay, so what is the Earn2Trade Gauntlet Mini Trader Evaluation? I'm going to try to describe it to you in my own words as clear as possible, and then later in the video we're going to talk about all the rules and things that you really need to be aware of if you're going to do one of these things. So basically, it's a trading evaluation, and you have a profit goal that you must reach before the end of your contract. Now, when you buy one of these things, they last for 30 days, meaning that you have to reach the profit goal by the end of the contract. And there is also an option to extend the contract, in which case you continue with where you were in the account, but you might have to renew it and pay another monthly subscription in order to do that. Everything I'm telling you in this video is based on information I've gained either by researching it myself or talking with traders who have done it already. So when you sign a contract with these guys, it's 30 days, and those 30 days include the weekends and they include holidays. If you started it today, October 4th, you would have 5, 10, 15, 24 trading sessions to meet your profit goal. However, if you did decide to start it, for example, on a Friday afternoon or on a Saturday, you're actually giving up 2 days for nothing because you're starting your contract on a weekend on a day that's not even actually a trading day. So do be aware of when you decide to start the contract because every single day will be counting towards the end of your subscription. Okay, so again, it's a funded trader evaluation. There's a number of rules that you need to follow in order for you to pass this evaluation. Like I said, you have to reach the profit goal, and you have to trade for a minimum of 15 trading days. So if you started the subscription today, you would have 20 something trading days. If you traded for 15 days and you've reached the profit goal and you haven't broken any of the other rules, which we're going to talk about later, then you officially passed it, and now you can move on to receive the funded account or the Livesim account. Now I'll talk briefly about what those things are first. So no matter which account you choose, when you get funded, you keep 80% of the profits you make in the account. However, there are certain rules that apply to the funded account that do not apply to the Livesim account. One of them is on the Livesim account, you have a limit of $5,000 that you can withdraw from this account of your own money, and after that you can't do it anymore. And what traders will normally do is once they've made the $5,000, they withdrew it, then they start a new contract completely and they do another evaluation, etc. The other route is to take the funded account approach. And when you take the funded account approach, there's a few things that you need to be aware of. Number one is that you are now considered a professional market data subscriber, meaning that for every exchange you subscribe to, you have to pay around $100 per futures exchange. And I've actually asked the question to their support team And I do believe that the CME considers you a professional subscriber all around the board if you now are trading on behalf of a prop firm. Another rule I discovered about the funded account is that there is tighter risk management rules you need to follow. It's called a trailing drawdown. So let's talk briefly about what this end of day drawdown or trailing drawdown is, and how the trailing drawdown could be very hard to manage, especially if you're not an experienced trader. Okay, so let's talk about the difference between the end of day drawdown, which applies to the evaluation, and to the Livesim account if you pass the evaluation. We're going to compare that to the trailing drawdown, which is the drawdown you will have if you are trading on the funded account. This is how the end of day drawdown works. The Gauntlet mini evaluation calculates drawdown based on the end of the day balance of the trading account. The drawdown is pegged to your positive account performance and is adjusted at the end of the day and updated after market close. This means that if you increase your profit by $1, then your minimum account balance will also rise by $1. So there you have it, guys. It's calculated at the end of the day. So if you made $100 today, tomorrow the maximum drawdown in your account is going to be $100 higher. They give you a few examples on this page right here, and I'm going to link you to this in the description. Now let's talk about the trailing drawdown, which is much more strict. It applies to you if you're trading a funded account. What I've been able to understand about the trailing drawdown is that the drawdown gets moved as soon as you have open profits in a trade. So this can certainly cause you problems if you're having profitable trades and letting them come back on top of you. A trailing drawdown is a drawdown that is pegged to your positive account performance. That means that if you increase your profit by $1, then your trailing drawdown will also rise by $1. All rules, including trailing, use closed and open equity intraday. So if you had a trade where you were up $1,000 and then you ended up closing it for break even, then your drawdown is going to be $1,000 higher, but your equity balance is going to be the same. Meaning that now, if you have losing trades, you can easily hit that drawdown limit, which is going to make you lose the funded account. So this is definitely a very strict risk management rule, and it is in order to protect the prop firms that are funding these traders. Definitely something to be aware of, and I actually didn't know what a trailing drawdown rule was until I started doing research about Earn2Trade. It could be argued that some of these rules might be slightly arbitrary and are definitely skewed in the favor of the prop firms funding the traders. Next part of the video, I want to talk about who is this designed for, or who I think it's designed for, basically. And I'm going to say it in short, this is not for beginner traders. As much as the advertising might make it look like it is for beginner traders, in order to pass one of these, you need to be pretty experienced in trading. You need to know what your strategy is, and you need to know how to only trade that strategy, or else it's going to be pretty easy for you, let's be honest, to fail one of these things. So I can see it from the perspective of the company offering the product. I can also see it from the perspective of the traders who choose to do these funded trader evaluations. I've chosen to do one because I think I'm in a reasonable spot to do it at this point. I have a working strategy. I'm confident in my approach. I have a relatively balanced lifestyle around my trading business, etc. So if you're an absolute beginner and you're considering one of these things, and you're considering doing one of the Gauntlet minis, I think that if you're a total beginner, you're probably going to learn more in a simple demo account where there's less restrictions. However, as soon as you understand the basic principles of whatever strategy you're trying to employ, it would be probably beneficial to do one of these evaluations, because it will give you a better feel of actual risk management principles that you should be following in your own trading. Like I told you earlier, some of the principles, some of the rules here might be slightly arbitrary, but again, I consider it a challenge, and I'm going to keep you guys updated on this combine and see what happens. I'm also going to trade my live account at the same time. Okay, so we have a few more things to cover in this video, and by the end of the video, I'm going to tell you what I think are the strong points of Earn2Trade, what are the main selling points that Earn2Trade has over other prop firms, and I'm going to also share with you some info I've gained from 2 traders that I've spoken with who have passed this evaluation and have gone on to get funded accounts or Livesim accounts. And before I do that, I'm going to go over what is included in one of these Earn2Trade subscriptions. If you guys made it this far, don't forget to like the video and subscribe, because it helps the channel greatly. Thank you. So when you subscribe to one of these evaluations, there's a few things included in your subscription. One of them is a subscription to the NinjaTrader platform, so you can use NinjaTrader with that. You also get access to a web-based trading platform, which is called Finamark, and I just clicked on it and we're going to see what happens here. So I've heard a little bit about this company, but basically it looks like a web-based trading platform. And again, I haven't gained much info on it, but this is kind of what it looks like. It looks pretty smooth actually. On top of that, there is a number of educational lessons included in this. And this is kind of where it gets a little bit interesting here. So you can see that I've clicked on the lessons tab on their online dashboard, and you can see that there's two tabs here, fundamentals as well as advanced. So for a trader who does not have a lot of experience in the markets yet, who doesn't know about proper risk management, who does not have a strategy that they're confident in and that they've traded in a number of market conditions, some of these educational materials here might be able to help them. Or will they? If you go through the courses, you can see there's a number of different topics that they talk about here. Everything ranging from a trader's mindset to what are market makers, to different order types, to understanding market manipulation. So let's go on to the advanced tab here, and you can see that they cover some things about technical analysis, candlesticks, supply and demand, Elliott wave theory. So there's definitely a lot of courses here that may or may not help you in your trading journey. But again, it is good to know that if you do take one of these subscriptions, you have a lot of educational materials included with that. There is a 60-day license for Journalytix that is included with any Earn2Trade subscriptions. If you don't know what Journalytix is, it's a journaling software made by Jigsaw Trading, and I've happened to use it for over a year, and I could say that it is very good. It's very reliable, and there's a number of ways that I've been able to personally improve my trading method by using Journalytix. I don't happen to use it right now because I switched platforms, but during my time of using it, it was very good. All right, guys, so I'm going to share with you now some experiences that other traders have shared with me about the Earn2Trade combines and why they decided to choose Earn2Trade over other combines. Okay, so this one trader, he's a friend of mine. He's had the ability to do funded trader evaluations from a number of different prop firms, and he has actually recently chosen to do Earn2Trade, and he has told me why. I'm going to tell you why. So he says, if you want to get your cash out the quickest, they are the best. So basically the withdrawal process with Earn2Trade is considered to be one of the smoothest out of all of the other ones, whereas some other of these prop firms have rules that you have to wait a certain amount, or there's like a minimum withdrawal limit. The minimum withdrawal with Earn2Trade is $100, and you can submit a withdrawal at any time. So that's very important. Another thing that you need to be aware of is that the first of every month that you have a subscription with a funded account or a Livesim account, the prop firm will withdraw 20% of your open profits in the account, and they will do this no matter what. So if you have open profits in the account, they're going to withdraw 20% of that, and your drawdown stays the same. Definitely got to be aware of that. They do that on the Livesim account as well as the funded accounts. All right, another trader who I spoke with last week who has actually passed the combine. This is the conversation I had with him. I'm openly disclosing it. He says that the most annoying rule is the maintain consistency rule, meaning that no one day can be more than 30% of your total profit goal. And you guys should definitely read about what the consistency rule is. Basically, it's that if you're having a really good day, they're going to increase your profit limit, or they're going to increase the number of days you have to trade in the funded account. Basically, the rule is that you cannot make more than 30% of your profit goal in one trading session. I will argue that this is very arbitrary, because I know for a fact from experience trading that if you're having a really good day trading, you should probably keep trading, because the majority of big profits are normally made on a small percentage of days in the marketplace. That's just a fact, and I'm not going to lie to you guys. He also says that if your max unrealized loss has passed your loss limit, you will fail the combine for that too. So that's definitely important to be aware of. Now, from the looks of the conversation with this trader, he is taking very sizable amounts of risk here. So I don't necessarily agree with that, but for me taking this, actually my risk is going to be a lot smaller than this per trade. I also asked him the question, can you fail for not trading? I know they say you must trade for a minimum of 15 days, but if you miss a day, is that a problem? He says, nope, you can take as much time as you want as long as it fits within the window of your subscription. So that's the timer you're going against. Let's talk now about market data. So market data is actually free with the funded trader evaluation, and it's free for all 4 of the major Chicago mercantile exchanges. The data connection and execution is with Rhythmic. Now, one thing to note, depending on the platform you use, the quality of the Rhythmic data you get here might not necessarily be to your liking. Now, I don't want to sound like I'm plugging Sierra Chart in any single way here, but if you do use Sierra Chart, I just want to let you know that it is possible to use the Denali data feed and route your orders to the Earn2Trade Earn2Trade rhythmic routing, and I managed to do that here. So I've got another instance of Sierra chart connected to the rhythmic direct DTC, logged into my Earn2Trade account. You can see the Gauntlet account is right here, 50,000, and I am in fact using the Denali data feed because Sierra chart supports having a rhythmic trading connection and then using the Sierra chart data feed as the data that's coming into your depth of market here. So that is very advantageous, and if you do want, in my opinion, what I consider to be one of the best data feeds out there right now for retail traders, you should probably definitely go this route. If you do have other questions about that, leave that in the comments below. I do have a bunch of other videos talking about Sierra chart, so feel free to ask about that. Now, when you pass the evaluation, there's different rules. So for the Livesim account, they will allow you to have one exchange for free, and then the other ones cost a lot of money, like $100 a month or something. If you only trade CME products like the S&P and the NASDAQ and the Russell, then you will get that exchange for free. But if you trade, for example, crude oil and gold, you're gonna have to pay more money for market data fees there. So definitely something to be aware of. If you do take the funded account route, each exchange is gonna cost you $105, and you're going to be considered a professional market data subscriber all across the board. Again, that's what I was told from the support at Earn2Trade. If you do need a confirmation about that, you need to ask them directly. Let's talk about some quick notes, things that I might have forgotten to mention here. So if you take the Livesim account, the profit limit is $5,000, and then they close that account, and then you can restart with another evaluation, or you can go to a funded account. We talked about the trailing drawdown versus the end of day drawdown, very important thing to be aware of. We talked about the consistency rule. One thing I forgot about was the progression ladders. It's basically that when you start one of these evaluations, you can only trade up to 2 contracts. If you trade more than that, you're gonna fail immediately. If you open up a buy position for 3 contracts and you don't have more than 1,500 of profit in the account, then you're immediately going to fail the examination. Only trade during the approved times. All positions must be closed by 3:10 Central, and when the exchange opens again at 6 p.m. Eastern, you can open positions again. And a few other things. I do believe this evaluation is for traders that already have experience trading, that already have some kind of working strategy that they're confident in, and they potentially want a little bit more time to tweak it. This would be probably good for them without having to risk their own capital all the time. It's also advantageous for traders where opening US futures accounts may be illegal in their countries. I've heard stories like this, and traders that live in those places will prefer to do a funded account if they can. You can use a number of trading platforms, including NinjaTrader, RTrader Pro, Finamark. Those are the ones that are included with the subscription, as well as Journalytix for journaling. If you do use third party like Sierra chart, of course, that's going to be extra. But again, if you want a good trading platform, use Sierra chart. 30 calendar days, and it doesn't include holidays. There's a fee to reset the account. If you don't meet your profit goal by the end of your subscription, you can renew the subscription and keep your open profits. You will fail the evaluation if you forget to leave open orders or open positions on. Basically, if you break any of the rules, you fail it. Commission structures are very similar to most of the competing brokers out there. But if you do look on their FAQ, I think it's something around $2.05 per side for the E-mini futures, but you can double check that yourself. All right, guys, so my conclusion here is that this product is designed for traders that already have trading experience, that might be looking to test their skills with some strict risk management principles to be following. And it also might be beneficial if opening a live trading account in the US is illegal in your country. It's also a good option if you do not have much risk capital and you have enough to pay for a subscription. But I believe that there is ups and downs to this product. There's ups and downs to trading demo. There's ups and downs to trading your own money, and it's up to you to choose what will be right for you. So if this video helped you in any way at all, feel free to let me know in the comments below, and I will catch you guys in the next video. All the best. Take care. Bye.